All right, I just wanted to go over an update what I'm looking at on the SPX, which I don't really dig into often. It's more methodical. It takes longer to play out than the crypto world, which is much faster. Um, but back in June, I had mentioned that I was like, this isn't a dip that I would buy. Not that I buy stocks at all, but if I were to, now would be where I'm paying more attention. Um, I mentioned this MACD cross when we have this much divergence on the bearish cross down, and these histogram bars are that big, which they're bigger than they've been ever. You can see last time they've been in the larger size, it's been at the 2008 and then the internet bubble. I believe we're right about here in the bear market, about halfway through, or here correlating to the fractal of the previous one in the 2000. But after every one, we end up testing this 30 level in the RSI or below. Smart money's selling up here, when the RSI is at that 80 level or near it. We were up here. I'm sure people were smart money's taking profits. We had the divergence where price action just keeps going up and up in the euphoria of the .com when the indicator on the RSI is trending down, and then we come back to this 30 level. So yeah, right now we're right around here, I believe, in the fractal. Same spot here. We got some time to move up and down and really create our low. It's possible this trend line holds. I mean, this trend line I have going back to 1970 corrections, and it's been pretty much our rate of growth average if you kind of look at it. It's possible it holds, but I'm more in the camp that it goes down. Now we're not in a recession. I made a video, I don't know, it might have been April, right where we started this upturn, saying I believe we are in one, and they're not going to admit it likely until unemployment rates are peaking again. And with their calculation, the official, which I believe the U3 here, they only are taking into account people that are actively seeking jobs, likely that are just within the unemployment payment system. So when their benefits run out, like those statistics get cast to the side, which they're more broad statistical measurement, which incorporates more of the actual workforce that's out of work, is this U6 level. And you could argue that the shadow stats one incorporates even more of those left out statistics. But I'm no expert in this, but you could see in 2008 when the market started crashing, unemployment just started to pick up. And then by the time they bottomed near 2009, 2010, it was clear by then unemployment was peaking. And now it looks like we're, could be forming this base and start our uptrend as more companies start failing or struggling and have to cut costs. But we'll see how it plays out. They're not going to admit unemployment levels. They're not going to admit recession until possibly the market's already bottomed. And then they get the herd to panic sell that, oh, now we're in a recession whenever the worst is over. So it'll be interesting to see that play out. Real quick on silver, anytime, we already topped in the S&P. January 3rd. You really can't argue that now. January. That was our possibly local top, possibly cycle top, but we'll see. Anytime the S&P tops, it's been a phenomenal opportunity to buy silver. Topped here, yeah, we went a little lower, but in the big picture, like, it was the bottom. Throughout the history of the data that I have here. So, I mean, accumulating silver under $20, I think, will be legendary in the next 5 to 10 years. You can see now we're starting to get support here around that 33 level. Last bear market, we broke below it after the bottom had happened. Or no, we broke below it, the bottom happened. We got back above the 30, confirmed support, and that was halfway through the bear market where the momentum started to shift back in to Bitcoin. You see we broke below it a little bit, broke below it a little deeper. That marked our bottom, got back above it, confirmed support. And there's not much data to go by here, but we pretty much confirmed support at the bottom of the even 2011. So we got to watch how this plays out. Smart money is going to see the RSI recovering from lows. At the same time, they're going to be seeing that we're breaking down into more bearish territory in the RSI on the after this divergence, especially with the MACD. The faster horse is going to be digital assets, and they're the ones that are a little further ahead in their bear market cycle. Part of the cycle, there's a bull part too. So it'll be interesting to see how this plays out. You can see the debt clock growing insane. The paper ratio is 418 almost ounces of paper silver trading to one actual physical silver that's actually available. So it's like hot potato. If people want to actually claim their shit, there's not nearly enough to go around. You can see it with gold too. When you account for the silver ratio, the dollar to silver ratio, this is accounting for the M2 money supply. All that inflation they created, saying, oh, it's an accident. They won inflation because it makes the elite's debt easier to bear. It makes it easier to pay. They won inflation. So, interesting. Last two times that a president created or went around the banks, issuing money directly from the Treasury, they were murdered. Lincoln and Kennedy here with his executive order 1111. So that's kind of a funny coincidence, if you want to call it that. So I hope everybody's taking care of themselves, getting outside, doing what you love. Stay positive, and I believe good things are coming. 4 to 5 candles are here. This is a 3-month chart on Bitcoin. It's usually our bottom. So 1, 2, 3, 4, 5, bottom out. 1, 2, 3, 4, bottoming out. And this is a bullish formation, morning star, and we had a nice bump. So we have this larger downside candle, indecision, and an upside candle. Usually it's a sign of a reversal. And we got to see in the next day where this candle closes and how the next candle will go. I doubt it's going to go straight to the moon like here, but I hope it doesn't. We want to see more structure being built at these levels for the next move. That way, maybe if we don't even break our all-time high, we have strong support to fall back onto. which would be the curveball that nobody sees coming.